Welcome everyone. Thank you for joining us. I'm going to go ahead and get started with the introductions while we wait for everyone to join in on the webinar. Thank you for joining us today in our affordable housing webinar series. This is our 8th webinar in a series of 10 focused on affordable housing. My name is Teresa Murphy and I'll be your official moderator for today's program. So we are continuing this program from 2021, and the annual theme is opening more doors in 2022. Each webinar we've hosted will be geared towards educating the realtor community about programs, solutions, and opportunities for your clients in this ever-changing financial environment. Throughout the year, we hope to provide information that will create more awareness and take away any stigmas associated with the idea of affordable housing. So most sessions will be held from 12 to 1:30, and you can register online at har.com/webinars. And these will continue to be free for all of our members. Today's program is centered around building equity with renovation loans. And before I introduce your speakers, I would like to remind you to put in your questions in the chat throughout the afternoon. You can choose for the questions to go just to the panelists or for everyone to see, but all questions will be fielded and answered as time permits. And since I know you will ask, all of our sessions are recorded and will be available later online on HAR TV. And that's accessed through har.com/HARTV. Now let's get started. So this morning we have exceptional subject matter experts joining us. We have Mylena Allred and David Sicard with Eustace Mortgage. Mylena began her mortgage banking career in 1982, working for Lomas and Middleton in the Dallas area. Throughout her career, she has been directly involved in sales, processing, quality control, closing, underwriting, secondary servicing, and is a licensed loan officer. In March 2015, she joined the Eustace family of companies as Senior Vice President and one of the principals of Finance Home America, the wholesale channel for Eustace. Since joining Eustace, Finance Home America has expanded into retail lending, with Mylena providing operations and sales support for both channels. Joining her today, we also have David Sicard. He is currently the VP/branch manager of renovation lending for Eustace Mortgage. He has been with Eustace since 2011 and is responsible for implementing all the FHA 203Ks, VA, and conventional renovation products. David trains and supports mortgage originators throughout the process of these loans. He works closely with the customer and contractors after loan closes and moves into the renovation phase. He monitors the home renovation and its progress to ensure it meets its time deadline, managing the draw process to ensure all draws are handled properly and in a timely manner. He conducts training classes to realtors and home buyers on a regular basis in various states and is a CE instructor specializing in renovation lending. He has been in the mortgage industry for over 40 years, and he is a licensed loan officer and the manager of multiple retail branches. He is well versed in all agency programs, including FHA, VA, USDA, and conventional financing. So we're really honored to have Mylena and David both here with us today. And then wrapping up our program, we have Rhonda Mitchell with Seth joining us. Rhonda Mitchell is the Home Ownership Director for the Southeast Texas Housing Finance Corporation, which is also known as Seth. She has worked with a variety of local down payment assistance programs throughout her career. And before joining Seth in 2006, she was a CRA loan originator known for working with many local assistance programs. Her lending background has proved helpful in the development, training, and marketing of Seth single-family programs. So welcome everyone again for joining us today. And I'm going to pass the program over to Mylena to get started. Mylena, take it away.
Thank you, Teresa, very, very much. Let's see if I can share my screen. Can you see it?
Not yet. It's coming up. There we go. We can see it.
I'm going to pull this up real quick. So it's right here. Okay. My name is Mylena Allred. And again, thank you very much for having us, Teresa. Today, we're going to have a basic training on all the renovation programs that's available in the secondary market. And again, we're going to focus on understanding the basics, and then we can chat if you want to know more details. But our purpose is really, really to educate everybody on this call on the variety of programs we have available. We're going to start with FHA. Everybody hears about FHA. You got your, okay, it's going to go a little slow here. We've already said the class objective. Now, David, he is the expert on the history of what's going on in the industry. And if I'm not mistaken, David, is it not that the average age of homes right now is about 50 years old?
That is correct, Marlena, which sets the way for renovation lending.
Yes.
Across the country, the average home is 50 years or older. Current home buyers are looking to get the maximum amount of space they can out of their purchase power. So they look at the older homes and they get a better deal on them price wise, and they can renovate it, add space, and still come out ahead versus new construction and make it their own.
Make their dream home.
That is correct.
And I guess a lot of us kind of get obsessed with the fixer-upper, love it or list it. That's kind of what a lot of the renovation program is all about. We have a software that, I'm trying to sit here, here it is. We have a software that is very similar to what the fixer-upper uses. And it's a vision of what we put in, like when we go into open houses. And it's a vision of a potential home buyer going in and saying, there's 2 or 3 sunrooms. I want to convert one of the sunrooms into a bedroom. I want to convert that large master bedroom that was built in 1952 into 2 bedrooms for the children. And that's kind of what we're seeing that's being performed on the renovation programs. We're seeing, hold on a second, it's going very slow.
Marlena, while you're looking at that, one thing that I'd like to point out is these renovation programs are not just for a single family house. We can take a single family, a duplex, triplex, or fourplex. FHA will allow that if owner occupied. We treat it just like an owner occupied residence. Or if you're buying, you can buy a fourplex and convert it back to a single family unit if zoning allows. So it's not just a product for a single family house. It has some unique features and all.
Well, this is one that we use on a lot of the open houses. And it says, okay, what if they only want to buy in a certain neighborhood for schools, particularly. The kitchen was once updating, all new appliances, a new tear down the walls. You can even add a brand new pool, brand new bathrooms. I wish there was a new roof, new air conditioning units. There's too much carpet. I want carpet. I want hardwood floors. We're trying to get everybody to understand that when you're going into these homes, all the different, here it is, everything that can be done for the renovations. And this is going extremely slow. If you guys have any ideas to make it faster. Okay, so we have FHA, conventional, and VA. So everybody in the industry, everybody understands that this, like, okay, I think we are working on USDA, which is 100% financing, but right now we have the FHA 203K limited, FHA 203 standard, the Fannie Mae, and the VA. So everybody says, well, what's the difference between all these? I kind of, and you guys can have access to this PowerPoint, but in your mind, you're going, FHA is primary residence only, and VA is primary residence only. It's a one-time close. Always remember that. So you're going to, here you go. So here's FHA. A standard FHA is a full renovation, 5 draws, FHA loan limits. Streamline is limited to $35,000, 2 draws, cosmetic repairs only. And that's as simple as I can say. Majority of our loans are going streamline, and let me explain why. Air conditioning units and new roof are the 2 things I see the most of, and those are not going to be more than $35,000. You get a roofer certification, you get a bid, you get you get an air conditioning unit, close the loan, get them installed, roll it into your loan, and life goes on. Do you see, David, what else do you see on the streamline the most of?
Mostly on the streamline, painting the interior. Sometimes I see windows being installed, new doors installed, but most of the time it's roofing, mechanical stuff, that type of stuff. Trying to see what happened to my screen here. Hold on a second. Okay. So again, with the streamline, you can do anything that's not structural. We can't make structural load-bearing wall. We can make some minor wall modifications to enlarge your. One thing we can do, we can put appliances, use it to add appliances to a house with both the limited and the standard. But just keep in mind what it says. Limited is a limited amount of renovations, whereas standard, it opens the door for a lot of modifications to the house.
And the thing to remember, everybody on this call, is it truly is a one-time close. So I want to give you a hypothetical, and this is on all of these loans. If you have a listing, I'm going to make it very even numbers. If you have a listing for $100,000 and you have $50,000 in repairs, you're going to have an initial purchase price of $100,000. You're going to add the $50,000. So you're going to have a subject to of $150,000. So your loan amount is going to be based on the $150,000. So if it's an FHA loan, it's going to be 3.5% down of the $150,000. We close the loan, and David takes over. He does the draws. He works with the contractors. The borrower typically will move in on a streamline within 30 days. The roof gets fixed. First payment due date is the same as, skip a payment. So if you close in November, your first payment due date is in January. Your repairs are going to be done in 30 days, typically on a streamline, 45 days sometimes, it depends. And so the borrower gets his interest rate, his loan, everything is based on that $150,000. It's very, very simple. Is there anything you want to add to that? Are there any questions, Teresa, in the chat room on that?
The only question was clarification about the average age.
That's
David,
50.
50. What we're getting at is a statistical study from across the nation. I saw something earlier this week, and I haven't verified it yet, but in Texas, they're saying that the average house was built prior to 2000. So I don't know the accuracy of that. I just saw it in a publication I was reading. We constantly get numbers. I've attended several seminars, and that's the numbers I hear. So it just really depends on the marketplace. Here I'm in South Louisiana. I do a lot of renovation loans in New Orleans, and most of those houses are 100 years old or older. So the age of the house really has no bearing on what type of reno loan we do. Theoretically, you could go buy new construction completed, and maybe they want to change something. Maybe they only had 2 baths, and they want to add a half a bath. We can do a renovation on that new construction to modify it to the homeowner's likings. That
And
answer
can
your
you,
question?
I think that does. And then can you clarify what you mean by draws, Melina?
Okay.
Or
Let me, I've got a screen, but I'll go ahead, David. I have a screen on draws, but yes, we'll go ahead. And David, do you want to explain the draws?
Okay. So when we close the loan, we pay the real estate commission out, we pay the seller's proceeds out. We take the renovation funds and it goes into an escrow account here, a renovation escrow account. Your builder starts work and he's going to want to get paid as work progresses. On a limited, we really do one draw when all the work is done at the end. That's why typically it's only 30 to 45 days. Sometimes they take longer, but we hope that it takes just a short period of time. If it is a necessity, we don't like to advance money up front without work being done. There has been cases where I will take it under advisement, look at it, and we'll determine if we're going to advance a small amount of money up front to start the project. Regular renovation loan, like the standard K or the conventional loan or the VA, there's a set number of draws. On the conventional and FHA standard, it's 5 draws. No money advanced up front, work must be completed. So your contractor can say, hey, I want to do draws on a 2020 schedule, 5 draws, or you can break it up 15, 35, 35, or however he chooses. It depends on what he wants. But when they want to draw, they contact us. My department orders draw inspection. They go out, do the inspection, turn the paperwork in, and then we process the draw and pay.
okay, great. I think
Okay.
that is a good explanation. Thank you so much. And then it says, does non-recourse loans apply or available on any of these programs?
What was that question?
It says, do non-recourse loans apply?
I don't know that. I'm not sure what they're asking.
Okay, I'll
Non-recourse.
have them word their question and see if we can address that later. Let's see, is loan amount reduced if the project is under budget?
No, ma'am. Once we close the loan, it's a set amount of funds. Now, what will happen if the contractor finishes it and says, hey, instead of 50,000, it came out to 42,500. The amount that is left, either from repairs that came in lower, inspection fees that were not used, any fee that's not used or any amount that's not used is applied to the principal balance of the loan when we close the renovation phase out.
Okay. And is there any additional costs associated with these loans?
Yes, there is some additional fees, but they are financed. Depending on what type of loan, let's just look at a standard, FHA standard. There's always going to be a HUD consultant involved, and Marlena may have it in the slide a little later, but a HUD consultant acts as our eyes in the field. They go out, meet with the customer and contractor, determine that the work is feasible and that it's going to make everything, correct with the home and meet their guidelines. They charge a fee based on the amount of repairs. It can be anywhere from $400 to $1,000 or even higher. Then there is draw inspection fees. The typical draw inspection fee is $350. So we allow 5, so that's $1,750. We do a title update. Depending on the loan, again, title updates cost $75 a piece with each draw. We figure that, calculate it. Then there's permit fees, if applicable. Then the next fee is a contingency. On all of these loans, we do finance in a contingency. The agencies, the secondary market, FHA, Fannie Mae, Freddie Mac, VA, they all require that we add a contingency fee in there for unforeseen items that might pop up when they start demolishing, doing demo work, or maybe pull down sheetrock and find that there's bad wiring or something like that, or bad plumbing that was not allowed for in the bid. We use the contingency fund to cover that. And that can vary from 10% of the contract price all the way up to 20%, depending on what's going on. The HUD consultant will tell us how much we need to collect for a contingency, but the minimum is 10%. And then there's a uh, trial processing fee or supplemental origination fee, however you want to call it. It's 1.5% of all those costs. But all of that is added to the mortgage. You're not paying it. It does show as a cost on your loan estimate, but it is financed. Now, I've had some customers that have, funds available instead of financing it. They wish to pay the contingency fee in cash in closing, or pay all the fees in cash, which is good if they want. We don't have to finance it. If they do that, and anything that's left that we did not use, then it's refunded to the customer directly. That answer your question?
I don't see her anymore.
I don't either. Did we lose them?
I see
Hello?
you.
I see you. Rhonda, you out there? Teresa?
Rhonda?
They say they're there, but
I'm
we
so
don't see them.
sorry. Sorry, you guys. I didn't realize I was muted still.
Okay.
I don't see Teresa. There she, no, there she is.
Yeah, she's there.
There
There
she
you
is.
go.
Sorry about that. It looks like I lost internet for a minute.
You and Rhonda. Did that answer that question? So, yes, there are fees, and most of them are financed into the loan, Teresa.
Okay, great. Thank you so much. And then there was a question about a timeline. Is there a required timeline?
There is.
Mhm.
On the FHA loan, whether it be the limited or the standard, they have 180 days to complete the transaction, all the renovation from the date of closing. So contractor or customer has to pull permits first before any work can begin, and then they should begin. There is an exception process. Last few years we've been dealing with COVID. We can't find workers. We do extend it, but it's done on a case-by-case basis and on a limited time frame. That's something that I look at and discuss it with my team, and we decide how far we're going to go out with it. Typically, it's 30 days. Okay. The larger loans, I know that may take a little longer, so we work with that. Our intention is not to penalize the homeowner or the contractor. We want the job done. We want it done correctly. So that's my goal there.
And some of the things like what I have up on my screen, remember years ago, I used to get the phone calls all the time. Will you do a repair escrow holdback? Probably everybody on this call has heard that all through these years. If you'll notice here, this is kind of the alternative. Look at some of these things on a limited 203K. Adding a roof, repairing the roof. What about when you have the seller is Fannie or Freddie or a bank or FHA or VA? They won't let anybody come in there. We do these all day long. Repair the fence, the walkways, the driveways. We're trying to educate everybody to just envision that if there's a lot of repairs out there, and unfortunately there are still a lot of foreclosures going on, the seller will not let us go in and touch anything. How often do you see stairs with no railings? Well, we all know that's not going to pass the inspection. So there's little things like this that the alternative is this and it's very inexpensive when you do this limited, and that's where we're trying to try to get your attention to say, give us a call if you have a house that's in a condition that has something that's fairly insignificant. Then this is the alternative. What David, do you see probably the least amount? I know I did one the other day that had the plumbing. They did plumbing, heating, and I think it was about $5,000.
That's typically the smallest we're going to see. If you think about it, somebody's going to come in and they're going to do the loan, and it really depends on the loan officer and education. If they tell me they're going to do 5,000, I'm gonna quiz them a little bit. Well, what about the flooring? Is the carpet old and stained, or want to replace it, or is there anything else you'd like to do? A lot of times customers think of just the obvious that items that they see as wrong. But when you give them the option, I find that they open up and they, try to get more into it. But 5,000 is usually the smallest.
And remember, the interest rate is no higher. There's no add-ons for the interest rate. It's, if it's an FHA loan, it's an FHA loan. Conventional, Fannie. So there's no additional price adjustments on this, Teresa. This gives you a brief ineligible improvements. Again, it's kind of common sense with the government that just in your mind, no luxury improvements with FHA. You can repair a swimming pool, but FHA and VA is not going to let you build one. A hot tub, barbecue pit, bathhouses, tennis courts, nothing in your mind that's a luxury improvement. Now, conventional, you can, but just in your mind going, the government programs are not here for luxury improvements. Then you have what he was saying was the standard. That's the major remodeling. And David does a ton of these, and we're talking a major remodeling. It's not a tear down. It's not like absolutely raising a property, but it almost is. David, what can they really can't raise it?
Well, they can to a certain extent. They have to leave the foundation and one wall.
Okay.
I got one I'm working on right now. The house burnt down and there is a partial wall standing. So yes, I can do a 203K standard on it, and they can add to it. Sorry about that, guys. So it does give some options. They just can't tear it down. As long as we got the original footprint of the house, the foundation, FHA will allow you to do it.
Okay.
One of those was in New Orleans. Again, they knocked it all the way down to the foundation, and we was able to go with it. Whereas a conventional loan can't do that.
Okay.
Okay.
Obviously, it says on the 203K, again, just in your mind, no luxury items. Borrower eligibility, I'm not going to bore you on that. It's an FHA borrower. FHA will go down to 500 credit score. On our renovation product, we're going to go 620. That's it. Any more questions, Teresa, in the chat room?
So we had the member explain more what the non-recourse debt loan is. It's secured by collateral, which is usually property.
No, we can only use the subject property as collateral. We won't let it cross collateralize with something else.
Okay. And then is there a preferred list of contractors?
We're working on that as my team does more deals in Texas. We keep a list of contractors, but really the customer can go online and search contractors. We want the customer to pick their own contractor. We do have an approval process, and that's further down the trail, but we want them to pick their own contractor. They just have to be licensed if required by the municipality, but they do have to be insured. In Texas, a lot of general contractors are not licensed, which is fine. A lot of the municipalities do not require it. Your specialty trades, your HVAC, your electrical, and your plumbing, those do have to be licensed and insured.
Okay, and then one last question before you continue. Are electric generators or solar panels included in that list of items? Yes.
You can include them.
Great. That's it.
VA, very, very simple. $50,000 is the max of the improvements. Very simple to like the 203K limited. You got $50,000, 30-year fixed, and no HUD consultant required. Got to be a veteran or a surviving spouse of a veteran. VAs are very, very simple. VA eligible properties. Now you're going to Fannie Mae. Any questions on VA?
let me put something out there on VA. There is one requirement on a VA that we have to do. The contractor has to be assigned a contractor number by VA. Simple process. They go online or they can do it over the phone, but they call it a VA contractor. So it's not hard to do. I help the contractors do it all the time.
Okay. Okay, now we're going to conventional. New roof, appliances, floor plans, unlimited options. Again, it's a one-time close. The conventional is where you can do second homes and you can do investment transactions. I probably, most of them also remember you have a larger loan amount. Fannie and Freddie just increased their loan amount to $715,000. So two reasons why you would go if you have to have a higher loan amount. Obviously, we're going to get into the Seth because that's a great program that you can get a down payment assistant program with it. Now that sales price is limited, but we're almost there with Rhonda. So you're going to have a higher loan amount with the Fannie Mae. You're going to be able to do investment transactions. You're going to be able to do second homes. Credit underwriting is the same on any conventional loan. The only key here is the total cost of the renovations cannot exceed 75% of the lesser of the cost sales price or as completed appraised value. So it's 75%. Do you ever run into David, any of them that goes over that? I don't think there's any exceptions. It's 75%. Is that correct?
It's 75% set by Fannie and Freddie. I have ran into a couple over time that has come up. And, you know, we go back to them when we make them, if they want to do something, we get them to reduce. Usually when we run into that is an appraisal issue, which is rare right now. But that 75% is capped on our worksheets when we do them, or any lender has a worksheet, but on our worksheets, it's going to tell us where that maximum amount is.
Okay. There's no minimum amount of required repairs. There's no required improvements or restrictions. So now this is where you can do those luxury items. You've got seller contributions on second homes, obviously, in investment properties is always going to be limited to 2%. You got 1 to 4 unit, 1 unit second home, 1 unit Freddie, double wide manufactured homes, condos. So again, except for Florida. Again, you got more flexibility in the type of product, on the type of property, the type of occupancy. You do have the 75%. They qualify the same as a Fannie Mae product. Minimum down payment is the same as a Fannie Mae product. If you have over 80%, you have to have private mortgage insurance. And so now, before we go here, we've covered FHA, the 2 different types, primary residence only. You have a streamline, you have a standard, no luxury items, 3.5% down, 620 credit score. Then you have VA, which is 0% down, got to be a veteran or a surviving spouse. Then you have conventional, where are the luxury items, second homes, investments. And then you can go up to, you know, the higher loan amount, $715,000 now. There's a lot of times when I do presentations with realtors and they're going, oh my gosh, there's so many options. How do I know? It's the same as when somebody says, how do you qualify a borrower? As a loan officer, it's the questions you ask. How much money do you have down? I only have 3.5% down. What's your credit score? 620. How much do you want to buy? 600,000. I've got a 750 credit score. Well, they can't go FHA because you have a maximum loan amount in that county and it's like 383,000. So there's a lot of questions that we have that we field the borrowers and say, if they want investment property, obviously we got to go conventional. If they want a second home, obviously they're going to go conventional. We do quite a few in the Galveston area. Think about all the flooding that's happened during Harvey, all the hurricanes that happened. Tons of the renovation programs in Galveston, Santa Fe, Bio Vista, League City. I can just go on and on. Of course, obviously, New Orleans and all the disasters they've had. So it just depends on what the borrower wants, the needs, and the property, the type of property, the condition of the property. So that's what we're here, is to help the realtors and help the borrowers figure out which program is going to best fit them. And so does anybody have any questions? Because this next one is where Rhonda will come in, and this program is on a conventional only, and it's going to combine Rhonda's Seth, the down payment assistant program, with our own renovation program. And it is a really, really cool product. But Teresa, are there any other questions on the previous before we go on to this?
No, Rhonda answered some questions in the chat for us, so we don't have any open right now, so you're good.
Well, anyway, I will let you, Rhonda, take over.
Awesome. Well, thank you so much.
Thank you.
And what I am going to do is I am going to share my screen. Hey guys, I'm sorry. This is Rhonda Mitchell. I'm with Seth, Southeast Texas Housing. And I thank y'all so much for being on the call today. Like Mylena and David were talking about, there's all kinds of renovation opportunities with different mortgage products. And what we've done with the help of Freddie Mac, and Freddie Mac, terrific partner for us and a terrific partner in the affordable housing world as well. So they've partnered with us, and we're able to offer the Freddie Mac Choice renovation product, and offer down payment and closing cost assistance. I mean, this is so amazing. So we've got opportunities now to help you with doing those renovations and getting that home up to snuff, and help with down payment and closing costs. So I've got some really great things to share with you about that product. And if there are any questions for me, y'all be sure and get them in the chat box as we're going on. I know, Teresa, you are doing a great job of watching these questions for us. So I do appreciate that so very much. But my name is Rhonda Mitchell. I am with Seth. And again, we're talking about that conventional option for renovating your home. It's our Freddie Mac Choice Renovation Mortgage product. And we have our Extra Edge program. And our Extra Edge program is going to take that product, and we're going to give you some down payment and closing cost assistance as well. So the Extra Edge program, and I'm going to kind of cover some highlights here. And the very first thing you're going to want to notice is you don't have to be a first-time home buyer. So you don't have, there's not a first-time home buyer requirement. You can even own other property, as long as the home that you're using our Extra Edge program for, you've got to own or occupy, right, as your primary residence. But you could even own one other property and still get access, right, to this great program with down payment and closing costs and your renovations. Now, our program we have property location requirements for that. And so the program is going to be available within Texas, except for just a couple of areas. And that's going to be the cities of El Paso, Grand Prairie, McKinney, and Travis County. So around Houston, right, sky's the limit. So I've got just a couple of areas that our program's not available in it. So it's going to be those cities. And when I talk about that city, right, remember, I'm going to be referring to where that home pays taxes. So we're looking at that city, where they pay the city taxes, county taxes. We're looking at that city, county taxing authority. So not necessarily the address sometimes. Now with our Extra Edge program, we do 1-unit properties only, right? So that is a little different than our standard Freddie Mac Choice Renovation product. But with Extra Edge, it is 1-unit properties only. Condos are permitted. There are no manufactured homes. That's the only restriction there, is going to be the no manufactured homes. Otherwise, 1-unit properties only for Extra Edge. Now, we do have a maximum purchase price for the program. Maximum purchase price is $484,350. So we don't go up quite as high, but that's okay. And we've got some income limits as well. And those income limits are really going to drive what your home buyer is going to be able to afford to purchase. You'll see we do have a minimum credit score of 640. And when we look for that minimum credit score, that's going to be the middle score. So one credit score can be above, one credit score below. As long as your middle score is 640, we are just fine. You will need to meet program income limits. And if you see, I've got that little QR code there, so you are welcome to scan that right now, and our income limits will pop right up for you. But as we continue on the slides, I've got some examples as well of what those income limits are. Now, you will need to complete a Seth Homebuyer Education class, and our Homebuyer Education class, it is available online. And your home buyer can access that class at sethfc.com. That's our website there. They can take the homebuyer education class, and that class is offered in English and Spanish. It's self-paced, so your home buyer can take it as long or short a time as they need to, so they go at their own pace. And we find that our homebuyer education class, I mean, now that it is online and so accessible, our home buyers are really enjoying it. And we get a lot of positive feedback with that class. Now, the class is required for one of the borrowers on the mortgage loan. So if you have maybe, for example, husband, wife buying a home together, we only require one of them to take it. Now, they can take the education jointly if they so chose, but we only require one of the borrowers to complete the class. And our Extra Edge program, I'm going to tell you guys, this is available exclusively with the Eustis family companies, Finance Home America and Verity. And I know there are some others, David, that I left out, and I apologize because I had some computer drama this morning. So this isn't quite the slide I had prepared. So we're going to make do, but there are a great number of Eustis family, the mortgage companies that this is available to. But this is an opportunity, this Extra Edge program, this is available just for Eustis mortgage companies. Verity, Finance Home America, I know those are going to be some that locally you're going to recognize in the Houston community. But yeah, while everybody can do renovation loans, not everybody can do the Eustis Edge. Now, when we talk about the Edge program, remember, we've got a limit, it's maximum 5% of the assistance, and those assistance dollars can be used for down payment and or closing costs. And when I talk about that percentage, know that I'm going to base the amount of assistance, right? Remember, that's different than what they receive to renovate, right? So renovation funds, that's going to go for, putting in that roof, putting in windows, adding a bathroom, that's where your renovation funds are going to be spent. But our down payment assistance, that's going to be for the closing costs and down payment needed to get that loan closed. But 5%, and that 5% is going to be based on that total final end all loan amount. It is forgiven. It's forgiven after 3 short years. So it's forgiven on that community second. We do have free homebuyer education and lower mortgage insurance for what we refer to as our charter level income homebuyers. So I've got 2 different income limits with our Edge program. Remember, I told you, homebuyers got to be income eligible to use the program as well. So our lower income home buyers, and I'll pick on Galveston and Harris County, for example, you'll see the maximum income for those counties would be $63,840. So if your home buyer doesn't exceed $63,840, then they get some extra benefits with our Extra Edge program. So they would get free home buyer education from Seth, and they get reduced mortgage insurance. And mortgage insurance, it covers the lender in the event of a default. So, not something that your home buyer is going to be like, yay, I get mortgage insurance, right? But you'll see that if they meet those lower income limits, that mortgage insurance, and you'll notice that blue chart there, it's greatly reduced. So you'll see, for example, if they were putting 3% down, that very last row there, the 97 LTV, if they were putting the minimum 3% down, mortgage insurance for our lower income home buyers, only 18% coverage versus the regular 35% coverage. So there is a huge savings for our lower income home buyers. But if your home buyer exceeds that income, that $63,840, no need to fear, right? We're going to go up to $111,720. on that max income, and they just don't get free homebuyer education, and they don't get the reduced mortgage insurance. They get just the regular plain Jane, what's available mortgage insurance. So not anything, no punishment, right? Just not punishing them, but they get just the regular mortgage insurance. And I'm moving through these slides. So Teresa, Mylena, y'all feel free to jump in and stop me if there are any questions that I need to come back and cover with this. So you see, they got to be income eligible, and of course, meeting those the 620 credit score requirement. But we do have those assistance dollars available, right, for down payment and closing costs. And right, what can you do with renovation funds? So eligible uses, fees related to permits, plans, title inspections. And did you know that your home buyer can use their renovation funds up to 6 months to cover the PITI? And I know I'm going to laugh and say that Mylena and David are going to get really excited about this, because sometimes, right, if you have a big project going on, you can't live in the house. You got to live somewhere else. And so you are permitted to roll in up to 6 months PITI in your renovation budget. But you can use this program to renovate or repair properties damaged by disasters or protect from future disasters. So think, right, when we've got communities that have maybe had hurricane damage, here's an opportunity to come in and really revitalize those communities. And a lot of times our home buyers, especially when we're talking about, are kind of our first time home buyers. Those home buyers, those entry level home buyers, the product that's available for them, it's kind of rough, right? And so this is an opportunity to come in, right, and get into that level that they're going to be able to purchase in that home that they can afford, but make it good, right? Energy efficiency updates, protecting from future disasters. There's all kinds of things that you can do with your renovation funds with the Extra Edge program. And eligible uses will always be to raise the existing structures, right? So you can't tear a house down, can't build a brand new dwelling from the ground up, and you can't finance personal property like couches or televisions. And the only exception to that is going to be for appliances. You can buy appliances with your renovation funds. And I'm going to take a quick peek and see if there's any questions.
There's one that came up about mortgage insurance.
And Mylena, do you want to cover mortgage insurance, or you want me to? I mean, I can give you the 10-second version, but I know you know a lot more about it.
Well, what is the question?
The question is, could you explain mortgage insurance?
Mortgage insurance, all of them, well, FHA is called mortgage insurance premium, MIP. On this particular program is called private mortgage insurance. And there are 6 insurance carriers. And I mean, I hate to say it, and probably this is the easiest way to say, but if you have less than 20% down, it is in case it's private insurance in case the borrower forecloses. It's additional insurance that the lender will get paid if the borrower forecloses on the property. It's just additional insurance that is required by Fannie and Freddie if the borrower has less than 20% equity.
And Cy's asking about the percentages. So the percentages is a coverage level. Mm-hmm. And so you see that we're going to require, the lenders are going to require larger coverage, right, for higher loan to values. Lower coverage, right? So when you put more down, right, they want less coverage. But they're going to further reduce that coverage when they're working with the Freddie Mac HFA Advantage product that we're offering now with our Eustace as with our Freddie Mac Choice Renovation model. And I told you, Freddie Mac, they're a great affordable housing partner. So Freddie Mac actually reduces the amount of mortgage insurance required for our lower income home buyers. And that goes back to Freddie Mac, right, wanting to be that partner for affordable housing and meet their goals. I mean, Freddie Mac has their own goals, and they've got goals where they want to increase access to affordable housing for those lower income home buyers. And this is one of the ways Freddie's going to do is Freddie's going to say, hey, if they meet our lower income limits, we're going to reduce some mortgage insurance. So of course, I'm going to pass that savings on to your home buyer. So another opportunity, right? Because when mortgage insurance is cheaper, guess what? Their mortgage payment's cheaper. So we're again working on making that home just that much more affordable.
Hey, Rhonda, can you back up to where that mortgage insurance,
Mhm.
there's a couple of other things I want to bring up on mortgage insurance that when you get mortgage insurance quotes, the rates are right there. So let's say that you have a 95% loan to value and you have to have 30% MI. And over here to your right, your standard MI. If there's always layers of risk. So if you have a self-employed borrower on a 95% with a 620 credit score, and you might have a quote of $200 a month. If you have a 740, a borrower that's been on their job, been on their job for 6 years, and although I don't think it's fair, but you've got a higher credit score, you've got an employed borrower, your premium could be $90 a month. Is it not incredible? Have you seen that, Rhonda?
Yes, I know, right?
It's incredible. They call it the layers of risk for mortgage insurance, and this is called private mortgage insurance. So, you can see the reduced MI options are incredible, but again, that's going to be based upon the community and the income level.
Yeah, and Sai said thank you. So I hope that answered the age-old question of what is mortgage insurance? It's not really a fun topic, I know.
No, it's not.
Rhonda,
But Janelle was asking about the 6 months PITI that we can roll in for the renovation costs.
Mm-hmm.
And she says, can a client also include their rent if not a current homeowner? And so I'm gonna answer this, and Mylena, tell me if I don't do it right. But so you close on the home, right? And you are a homeowner. So now you own the home. You can roll in 6 months PITI for the mortgage payment that you're going to be making on that home, right? That home that you just purchased. And that is, again, the thought is that you can offset that expense, because maybe if you've got, I can't live in the house for a month or 2 months or whatever, you want to roll in that amount of payments so that you can, better afford, right, that temporary living situation.
You're correct.
Did I say that right?
That was perfect.
Oh, okay. Hey, I'm going to take you on the road now. Thank you.
Let's go.
And then I am going to go with, I have some questions here. And we're going to start with, this was not supposed to pop up with the answers, guys. So, I got some questions, answers here that I thought might be of kind of some interest to you. Just, can you use edge to remove an exterior wall and build a new one? Yes, as long as it fits in the reno budget, thinking that, you can't build a structure, right? But exterior walls, that's okay. But remember, can't tear down a house and build a new one. That is not permitted. But with our extra edge program, right? What if a borrower wanted to tear down a detached garage and build a new one? And that would be permitted. I'm sorry, did I lose you?
Nope.
Okay. So lastly, can the borrower make the repairs themselves or use the funds to buy materials? And that's a big old no, right? And I know Melina and David are going to shake their heads yes for that, right? So yeah, the borrower can't make their own repairs with this program. But they can protect, remember, they can protect from future disasters like floods and hurricanes.
Mm-hmm.
So to think, I'm going to knock on wood real quick because, it's coming, right? We're in our season. So, keep that in mind, that there are just all kinds of opportunities, to go in and to this, what we know is an aging housing stock, and go in at that level that those home buyers can afford and make those look good. And Keisha asked, is solar panels covered? Yes, yes, you can include this, because that's going to be when we talked about making your home more energy efficient. So solar panels, that would be an acceptable use of your renovation funds. And so don't forget, right? I got some down payment closing cost assistance to go with that when you work with our EDGE program. But our EDGE
Now-
program, remember, it is only available with our Eustis family. And Marlena and David are great
can I
partners
share-
for us.
Can I go ahead and share my screen, and then I want to show you what it is, Rhonda, so that you and I can, it's like the whole process.
Absolutely. I am going to
Okay.
turn it back over to you. So you should be
Okay.
able to share now.
Share screen. Let's see, Denise, am I doing this right?
And if there are any other questions while she's doing that, y'all be sure and get it in the chat box.
What?
We will keep an eye on those questions and be sure that we get you answered. But I do appreciate the questions.
Okay, so this is where we have 30 minutes. So to me, we want to go through the process. So we've gone over the different types of renovation. You've got the FHA, you got the VA, you've got the conventional, you've got the EDGE with the down payment assistance. And now they're like, now what? We've asked a lot of questions, and they're like, what is the next? What's our experience as a loan officer, as a mortgage banker, and then the experience of any realtor that's on this call or on this training, if any of you guys have done it. So we're going to share with you. And Rhonda, if you want to share, David, I'll start the process. But they're like, where do we start? So I'm going to give you some examples, and then you can just interject. We have some of our loan officers have co-branded some flyers, and we have tons of them, and they'll go to open houses with the realtors. And remember, we're in 18 different states. My focus has always been Texas. David does all different states, but you know, my love, passion, I'm here. And Rhonda's here in Texas. So we'll go to open houses. We do have a software that we're almost got the hang of it. It's kind of like the one that, like I said, what is it? The Fixer Upper has it, kind of the vision that you have. What would the house look like with different options? So again, we have co-branded flyers. Denise is right here. She's done a few of them. I've got several in our El Paso. We have an El Paso branch. We have a McAllen. We have a Harlingen. So we'll go in and do this before and after. There's kind of some of these pictures I've shown you, a before and after. Before kitchen, you've got older appliances. Like David said, don't just stop at the Tupperware colored appliances that's in the kitchen. What about the hardwood floors that could be their dream? What about the I don't know, shower? Let's just build a beautiful shower. What if the wife wants a bathtub? Maybe there's a handicapped mother-in-law that wants the back bathroom to have some handicapped provisions. There's a lot of things that you're almost interviewing all those potential homeowners that come into the house. Well, we have our loan officers that are experts in this. So they go and you contact them, and then we're going to look at the property and we're going to give you some ideas. And then we're going to co-brand it. We're going to send you your picture, a couple of before and afters, and then we can go do the open house with you. We have all the flyers. We sit there. Depends. I mean, Denise had one, a couple here. It was, I don't know, on a Saturday and a Sunday, and then one was on a Friday. I think the Columbus Fair was going on. So there's so many different options. That seems to be the most successful. And we've gotten quite a few closings. David, what do you see? Because you're doing so much of the post draws and the post. That's what we're seeing as the most successful here, is working with the realtors up front, looking at the house, the vision, and then when we get a borrower, we work with them. We get the borrower, we pre-approve them. Sometimes we'll get a borrower and we help them shop for a house. There are many occasions that we do get a referral, and then we're going to give them to a realtor. So we'll get the borrower, we'll give them to one of our, we'll refer them, and then work together. We'll get quotes. David works really well with getting them with a contractor. If they don't have anybody, we want the borrowers to get their own contractor, but we'll also help them get their contractors approved, negotiate the price. So there's so many different ways to market this, is what I'm saying. That's just our most successful way, is to co-brand with the realtors. David, again, I'll let you speak now. What are you seeing? How it's being marketed?
Well, I operate just about like you. I like to talk to the customers initially. I have, I'm a salesman at heart, and I still originate. So I do open houses when I'm asked to, flyer, but at heart, I like to talk to the customers and listen to what they're telling me. And one thing that I didn't mention early on is when we do these renovation loans, we're helping the customer build equity in the property. Remember, we have proven it subject to the repair, and a lot of times we come in with equity. I might need an appraisal of 300,000, make the whole transaction work. I might get a 315 appraisal. So they got 15,000 of built-in equity the day we close the loan. The good thing about it too, when somebody asked a question about mortgage insurance earlier, on the conventional loan, as soon as we reach that 20% loan value threshold based off of current appraisal, you can petition us to drop the mortgage insurance. So if you use an edge product, you got to reduce the MI to begin with. We got equity in the house possibly. It may only take you a year to remove the mortgage insurance. Okay, so there's some good benefits there, along with the normal conventional product. And this is why I like to talk to the customers. Marlena mentioned, oh, I got a mother-in-law that's disabled living with me, and they're buying a 4-bedroom house. How would you like to add an additional living unit just for mother-in-law? If you can do it by the zoning and all, we can do that with conventional loan, conventional renovation. We can add a mother-in-law suite, either attached or detached from the house. So there's a lot of things to look at, and it's just really paying attention to what the customer says. Then the other thing I do, and I do a lot of realtor education, a lot of classes, and I like this with the listing agent. Listing agents, y'all see the house first. You know what the house looks like. So if you're walking into this house and you see the carpets are damaged, worn, torn, stained, you see the walls have holes in it, house hasn't been painted, doors hanging off the hinges, so that, just really need some tender loving care. You can go ahead and pick a contractor you work with, get that contractor to come in and give you an estimate of what it will take to fix that house. They got dated appliances, they got a dated kitchen, they got dated bathrooms. Go ahead and get your contractor to give you an estimate so that you can have it out there, so that a buyer comes in and looks at it. Hey, look what we can do. We can do this. You're going to have your sales price, and then we'll have the contract price. So it may help you sell that house a little quicker.
And to combine that, think about this. You got somebody that doesn't have any money. I mean, no money. And they're not fortunate. Don't you hate it when you have somebody say, oh, well, just go get a gift? Well, who all is fortunate enough to have somebody that's got a donor in their back pocket? Sometimes I used to say, come on, not everybody has, a family member that's fortunate enough to give them a gift. Well, think about it. You got Seth. Seth is over there with, not only do they have the ability to have for the down payment, but for the closing costs too. You can tell that Ron and I have such a passion, because think about, you don't have to go in there with any money, and you can kind of build your dream home. And that's where we're trying to just get everybody to understand, and then just give us a call if you have any of those potential buyers and or potential properties. It's pretty good program. Or programs, should I say.
Do we have any more
Um,
questions?
Yeah, so and Marlena and David, if you can put your information into the chat, that would be really helpful. We had some questions about reaching out to have y'all partner up with a open house or a pop-up event or something. So if you can provide your contact information for our members so they can reach out to you for any other questions or there we
Here
go.
is, can you go, here's my information. And they can reach out to me. And then if I need David, because David is in Louisiana.
Okay.
So I would do all the ones here locally. And then if there's any presentations like face to face, then David can fly down and he and I can certainly do some presentations because he likes to come visit Texas a
Oh, I
lot.
love
Mhm.
Texas.
He loves Texas. But there's my information right there. And can you provide this PowerPoint to everybody that was on the call, Teresa? Is that
Yes.
possible?
I'm going to send yours and Rhonda's via email with the recording of this as well to everyone that registered. So everybody will be getting a copy of this.
But no, please reach out. You can either email me, text, or phone, and we can share with everybody on here examples. But I think it's just almost unlimited. David, the ones that we've seen is almost like he said, the most extreme was it had the foundation and one wall. So it's not exactly like Rhonda said, we're not raising it because we had enough, but hurricane season's coming up, everybody. And we all know we could, unfortunately, hurricane season, and we know some houses are going to be affected. So this is the time of the year that just keep that in mind. Also keep in mind that we are in 18 different states. So if you have any referrals or you have other offices, give me a call and we can certainly accommodate certain other states. Are there any other questions on the chat, or do you want, Teresa, do you want David for the next 15 minutes, David and us to share what other, some of our other examples, because we have so many, to give everybody on this call an idea of some of the other renovations we've done.
Yeah, I'll let y'all do that just a minute. We had a couple questions. If you could share the name of the software that you use.
Hold on a second. Yes, let me find it, and then I'll find it while we are.
Okay. And then while you're doing that, if a veteran is deceased, can the wife use this program?
Yes, if she's not remarried, she is the surviving spouse. She can use the VA if he has eligibility. She picks up his eligibility. So yes, she can use it.
Okay, great. And I think that was all the questions that we had right now. So if you wanted to use the last few minutes to go over any other information.
Yeah, I can hang on here. If anybody's got questions, any particular question about a renovation home, throw it out there. I'll be glad to answer.
Yeah, hey, this is Rhonda. And so I was going to say that, in addition to, and I thank y'all so much for being on this call today, but in addition to, of course, learning about all these resources to help your home buyers, I want you to know that you're also getting these resources to help your sellers, and knowing what's available in the market, will help you market, right, that home maybe that you've got listed that does need, a little love, a little help, helping that seller get, the biggest bang for their buck on that sale. So there's all kinds of opportunities with these renovations. So think, right? So think outside the box. Think about these products for homes that you're looking to, helping that home buyer find and helping that seller sell.
And Rhonda, to that, these products are available for purchases, but they're also out there and available for, and not the Seth, but the regular renovations.
Mhm.
We can help somebody that needs to refinance and renovate. Maybe as an agent, you've got a friend or a relative they don't want to buy a new house, but you know they want to do some updates. We can use these products to help them refinance their existing loan, include the repairs, just like a purchase transaction.
Absolutely, absolutely. And I am going to go ahead and put my information in the chat box, but know that after the training, the copy of the material that you are going to receive, my contact information is going to be there as well. But I am going to get my information in the chat box for you guys.
Great. Thank you so much.
And Marlena, I know you've gotten a lot of questions on that awesome software that you have available to kind of help, envision, right, what can be done. Is that something that you can pull up yet?
No, I'm looking for it. I'm not but anyway, as I'm looking for it, I will go ahead and David, I'm not the best at trying to figure out how to get back onto my email. There it is. So while I'm looking for that, David, what are some of the bigger projects you've done?
Well, where do you want to begin? I have actually done something that FHA allows. I have had a customer that owned a piece of property and we moved a house from another section of town onto that property. FHA will allow you to do that on their rehab, not conventional. That was a big project. Right now, as you know, we've had all the flooding in the last couple of years and all. I have seen a lot of houses that we are raising. And I'm talking about raising from a traditional pier and beam house that might have been just 30 inches off the ground to 14 feet off the ground. That in itself is kind of interesting, especially when they're lifting, if it's a concrete slab house. You think, oh my God, how they're going to raise a concrete slab house. Takes about 2 months, but they raise it a little bit every day. So I've seen those raised 14 to 16 feet up. It's just really what the customer wants. I got one right now I'm working on. It's like a $400,000 project. So it just depends on what you want. And the ability to do just about anything with a conventional loan is what makes it unique. Where the government loans, the FHAs, the VAs, they're limited. Conventional, you can build a swimming pool. You can build one of them fancy, I call them fancy pools with the slides and the waterfalls and all that. You can build an outdoor kitchen. So you can build a detached garage with a living unit on top of it. So sky's the limit as long as they qualify with a conventional loan. And one thing I saw on the slides earlier and we didn't really hit on, we do offer renovations on manufactured homes with land. It has to be a double wide, and there is we cannot exceed $50,000, and it cannot be any structural work. So if you happen to be marketing a manufactured home, we can do that. If they want to do a renovation on it, they can replace the flooring, they can put new windows and doors in, or new appliances, just like a site-built house. So they're really exciting products. They are a little bit time-consuming initially getting the proper documentation, but if we get everybody on the same page from the get-go, we can turn these loans. I hear from realtors all over, oh, gee, I don't really want to do it because it takes too long. Well, 9 times out of 10, it's taking too long because we're not getting the cooperation of the buyer or the contractor getting us what we want, documentation up front. So that goes back to the quality of the loan officer. Our loan officers here are trained to request documents up front to speed the process. I've turned renovation loans in 25 days, from start to finish. That's really well. But typically you can be 45 days.
Yeah. And there's so much interest in these programs, David and Mylena. I know there was a question that came up asking if there is a difference in the interest rate between a traditional financing and a renovation loan.
There is a little bit of a difference. Now, Mylena prices for her market, so she may control her pricing, but traditionally there is a small difference in the price, but nothing drastic.
No, we not here in Texas. We don't have a hit for the renovation pricing.
There you have it. And they're asking, Jasmine's asking, do condos and townhomes qualify for the FHA programs for the FHA renovations? And I'm going to say yes, right?
Yes, townhomes do, detached or attached, condos have to be FHA approved, have to be on the FHA approved list. They
There
no
you go.
longer will allow us to do spot approval renovation.
Awesome. These are really great questions. And it looks like you've got a lot of people thinking about opportunities that are out there.
Okay, so how do I'll just tell you the one that we picked. We got the software, and it's called the Virtual Architect. Virtual Architect. It's the ultimate home design. And it comes, we got the one that has the software. And it really wasn't that expensive, but we did get the upgrade. But it's called the Virtual Architect Ultimate Home Design with the complete software.
Great.
Did everybody get that?
Yeah.
You're welcome.
There was also another question about if interest rates are any different than traditional financing with these.
Yeah, that's what we were just discussing.
Okay.
But in reality, not really. We let's say for instance the Seth Edge, okay, that has different pricing because it has the DPA. So it is a different pricing than just a standard Fannie. And then you have the standard Fannie. So I would say the Edge has a different pricing engine. The FHA is different than Fannie. The VA is different than FHA. So they're all different from one another. But it really doesn't vary much from the standard agency product. Does that answer the question?
Yeah. Yeah, I think that's what they're looking for. And I'm going to say, like you mentioned, Edge has different pricing, right? But
Yes,
when you're working with the Edge, the Seth Edge assistance, doesn't matter if you're using it for a purchase or using it for renovation and purchase, the rates doesn't, there's no difference in the rate. So I mean, even then, right, there's still not any difference when you're doing a renovation versus a purchase. So I've got my Edge program. It's not just for renovations. It also can do purchase with no renovation.
That's
And
right.
there's not a difference in the price, whether you renovate or you're just purchasing, the rate's still the same.
And don't forget, for all of you out there, this is for refinances too. So in the back of your mind, you're going, well, gosh, how is that going to benefit me as a realtor? Do you know how many realtors come to us to refinance? I mean, you all have your houses that you want to renovate. You might have a couple of investment properties that you want to renovate. You need to get the cash out to renovate, or not cash out, but you want to refinance and you want to roll in the renovations. So just don't forget that, it is for refinances too. And I cannot tell you how many realtors we do their loans, because primarily because a lot of you guys have investment portfolios. So you come to us to refinance their, a conventional refinance or second home. So just don't forget, it's not just for purchases.
There's so much to know about renovation products, and y'all are so well versed in it. It's such a treat to have you on and have you talk about all these opportunities. It boggles my mind what's available.
There's a lot, and we love it. So call us anytime.
Well, thank you guys for being on, and thank you for your presentations and for all of the knowledge that you've given to everyone today. I really appreciate it. And I just wanted to remind everybody that we'll be sending out all the presentations and the recording of this webinar via email, probably be tomorrow once we get it downloaded and everything. And then next month, we're hosting an in-person housing symposium. That's going to address issues impacting the housing in the Houston area, including affordability and inventory. So it's a free event that we're hosting. You'll earn 3 hours of CE credit. So I think this will be very informative for everyone. So go ahead and go to har.com/education for more information and to register for that event. That's all I have for today. Thank you again, Mylena, David,
Thank
and
you.
Rhonda.
Yeah.
Okay, have fun,
All
Rhonda,
right.
in Fort Worth.
I will. I thank
Okay,
y'all so
see
much
ya.
for joining
Thank
us.
you. Y'all have
Thank
a great rest of the
you.
week.
Bye.
All right. Bye-bye.